Good morning, Predicted Trades family. Hope everybody's doing well. Hopefully you can hear me, see my screen. Let's dig right in. After that big CPI drop yesterday, was stuck in a range, as we pretty much knew it would be, given the fact that we had a 30-minute squeeze that was still open going into the opening bell, right? And without fail, like we always do, we played that range until it breaks, and it didn't really break. We had a little pop in the morning where we made some money on calls. Then we shorted back down to this squeeze bottom and that 39.41. We catch a bounce at that squeeze bottom, so we go long up to the squeeze top, where we lock in our longs. And when it retested the squeeze top, that's when we got short again to the end of the day. Then there was a crazy bounce. I'm not sure that everyone really caught it. I didn't really catch it from the bottom of the squeeze. I just kind of scalped quickly as it was very close to the end of the day. But overall, stuck in a range. Today, going to be similar, since we have now a 30-minute, 1 hour, and a 2 hour that's starting to form around us in this range. Before we start digging in too much to where we're going today, let's take a quick look at our economic calendar. We got our PPI yesterday. It was in line with forecast, and overall decent. Wasn't another tanker like CPI. Today we have jobless claims, retail sales, some manufacturing index data, and import price index. And we have a little bit coming out after the close, but not expecting that to have much of an impact. Tomorrow we have University of Michigan Consumer Sentiment Index and 5-year inflation at 10 a.m. So, what can we expect for today? One thing we want to have on the back of our mind, it is OPEX week. That's monthly option expiration. Also, we're in a triple witch because it's September. So, lots of things expiring this week. We could stay in this range and not really go anywhere. We've had a big drop back to this range. A lot of folks out on the street are shorting, thinking that we're going to crash down, right? So it wouldn't be surprising if we didn't do that and we stayed right in this range. Not saying that we're necessarily going to rally back, right? But anything's possible. We have our squeezes in place, and so we're going to play the range till the range breaks. We've got key levels at this 39.41, 39.53 that are trying to provide support. We also have POC down at 39.29. If you go look at the low yesterday when we made this drop, we slapped POC, which is 39.29. Point of control is what POC stands for. And the second that we slapped that, we rallied back at the end of the day almost to highs from a new low. So we definitely have buyers waiting at that point of control. Let's see if we drift back down to test it again today. But ultimately, when we hit squeeze bottoms and hit these key levels that got defended multiple times yesterday, going to be looking to go long. Up to the top of the range, back to 39.80. If we can get through 39.80, first stop is 39.96. This is, get a little bit more. There we go. When we had that CPI drop, we defended 39.96, really well. Tried to get going off of it, but then ultimately gave it out. So right now, that is a key level that we're going to want to try to fight back to see if sellers are still present, kind of wake them up again. I mean, obviously, sellers are still present, but you get what I mean, like the large amount of sellers that stepped in end of day on CPI. So, our daily 8 MA is this cyan line. It's caught up to that 39.96, creating a little magnet above at that daily moving average. Our daily 21 still sits way up above at 40.37, but within a couple of days, that daily 21 will probably end up at this 40.20, which was our last rejection point on CPI. If we start to break down through 39.41, sorry, that CPI wick messes with me. There we go. If we start to break down through 39.41, we have pocket 39.29. If we can't bounce there, we've got a key level at 39.22 and a wedge. Trend lines. So these trend lines are actually trend lines from the low of year. If we go back and look on the daily, we connected some trend lines from the lows of this year in June and July, and that gave us a bounce last week that sent us up into that CPI data. As long as we can hold above that trend line, we are trying to establish a higher low. We started a sell-off after testing trend lines from high of year. That sell-off brought us back to trend line from low of year, where we caught a bounce going into CPI. We fell back to that trend line from low of year. We didn't quite tap it on Tuesday on the CPI data day. We didn't tap it yesterday, and that trend line is slowly coming up. So we could get down to test that today, potentially. And we could even test that and bounce back up into this range, keeping all of these squeezes intact. Below these trend lines, that's where it starts to get hairy. We have our lows from the last test of the trend line that we'd end up testing first if we slip through the trend line. And we have our second Keltner to the downside at 38.71. So ultimately, as we say every day, we're going to play this range till it breaks. If we can hold above this 39.53 pre-market, and we have our data coming out in a few minutes, so we'll see what that reaction is. But ultimately, let's see if we can hold squeeze bottom, hold this zone, get going back to the upside to yesterday's highs, try to eke higher to this daily 8, and that 39.96 4,000. And if we're weak, I'm going to go down to retest POC, which is now low of week. Retest these trend lines at 39.22 and 3900. On NQ. I'm going to set this back to a smaller time frame so we can keep an eye on ES for that reaction to the data. On NQ, we have a little trend line I drew from last week's lows that we fell to on CPI, and we held it all day yesterday, only wicking slightly below it to test this 12,100. Very key level on NQ. Used to be support, then it became resistance. Now we're treating it as support yet again. So on NQ, that 12,100 starts to break down, meaning we get below it, come up to test it, and reject it yet again. We're likely coming down to the psych level of 12,000 and that second daily Keltner to the downside, which is flatlined here around that 11,900, we'll call it. Past that, my next key level is 677. If we can get going to the upside, say we continue to hold this trend line, maybe slap 12,100 and get a nice bounce again, coming back up to retest yesterday's highs, around this 12,250-ish, where I have a key level. You can see these two key levels totally contained price action yesterday. We hit that 100, little wicks underneath it, but ultimately every candle closed above it. We fought up to that 250. That's where we locked profit on our Q calls and switched to puts. And from the key level right back to the key level. We're still stuck within them. So, well, let's see how each interaction at those key levels goes. If we can get to that 250, we've got the daily 8 sitting up above, right near last Thursday's highs. So let's see if we can get up and test some of those levels. In fact, if I put my cursor right near last Thursday's high, it pretty much cuts right through the middle of the daily 8 and daily 15 now, creating a zone target to get to. But let's see how this data goes in a few minutes. For all I know, we could just dump right through, rip right up, clear this range before open. On the ruddy, same thing as everything else, holding trend lines from recent lows. There we go, yeah. Trying to hold trend lines from recent lows. Held on to that daily Keltner, first Keltner to the downside yesterday. Slipped it a little bit. Russell was kind of weak to start the day, while NQ was trying to lead to the upside. So we definitely see a lot of rotation going on right now, meaning we've had a big drop. We're going sideways, and they're rotating around the indices. This can be indicative of the next move down or the next move up. They're building their positions now. That's why we're reading all the price action and key levels to try to get an idea of where they're wanting to take things. Let's see on Ready Today if we can hold that daily Keltner still at that 1827, the squeeze bottom, and try to fight our way back up to yesterday's highs and what looks like some new highs overnight. Around that 1850, we have our daily 8 and 15 up in the middle of the squeeze. So those are the targets to the upside. Anything past that would be the daily 50 and the daily 21, which sit up around 1870. If we start to break down and lose 1830, 1827, 25, where this daily Keltner sits, then we can slip down to test that 1800 and this second Keltner to the downside at 1783. YM. I'd say YM was a little weaker yesterday, and in that midday drop, you can see the relative weakness, right? We saw on ES and NQ that this little bounce at VWAP to try to get back to highs, they did get up near those highs. But on YM, very muted bounce, only got about halfway from VWAP to highs and then rejected down. And during this drop, YM was dragging ES down for the new low of day. We can take another look here at NQ just to make the point. NQ did not dive through the support it had. Did not really set a new low of day. It held that 100 while YM was still dropping. So just a little point on rotation. And you want to look for what's weak at the moment, what's dragging us around. So let's see if YM can be a little bit stronger today. We are starting to set higher lows from yesterday. Yeah, let's go ahead and make a little trend line here. I like to do these little trend lines just to see if we can hold this progression of higher lows. We still have our economic data coming out in a minute that could tear right through this. Overall, let's see if we can hold squeeze bottoms, hold this 31,100 that we held earlier in the day yesterday. If we can hold and stay above that, we're kind of making an inverse head and shoulders, with that being the shoulder line, this being the head. If we can move up from there, looking to get back to 31,300, where we started topping out yesterday, up to 31,400, the highs. We do have that first Keltner to the downside, which we are below, whereas other indices are either at it or trying to use it for support. So if we can go to the upside, wanting to get to that first Keltner to the downside and this 4162, sorry, 31,462, making a zone right in the middle of the squeeze to get to. Just like yesterday, when we get up into a squeeze and hit a key level, we didn't quite hit it on YM, but we did over on NQ. When we hit key levels in the middle of squeezes, that's definitely where we want to take profit. The first test is the best test, right? We get up there, we slap it, we're going to get a rejection. So, economic data's dropped. No real reaction yet. Holding trend line. But let's let the data completely come out and see where the next minute takes it. Looking decent. So, let's see if we can continue to set higher lows. If we can hold a pre-market low at this squeeze bottom, we could slip it a little bit to get to that neckline that I just described. But, yeah, looking like a decent reaction. I like it. So, moving on to Apple. Apple was decently strong yesterday. On the CPI day, it was one of the weakest names in tech. It gave no bounce midday, while others did, and slipped right down to where they picked it up the previous week. If we look, they parked the bus at this zone the previous week and slipped it just a little bit to get a bear trap, right? And then ripped it right up. So, point being, this zone of support is still a zone of support. And the same buyers that ran it up last week kind of showed their face yesterday. After a very weak day on Apple, it was decently strong in the morning. It did come back with the market, but still buyers were there ready. So, let's see if we can continue to hold this zone of support. We do still have some squeezes in place. Looks like a 30-minute and a 1 hour. So that 1 hour squeeze down at yesterday's lows and pre-market lows. Funny how that always works, right? The top of the squeeze yesterday's cash session lows, the bottom near the pre-market lows. So let's see if we want to dip and hit those levels again for a retest, or if the zone can hold us and send us back up through our pre-market high at 156 back to yesterday's high around 157. And if we can move past that 159.5, where the daily 21 and daily 50 and 15 all sit, making a target zone. If we do slip that zone of support and slip below that, then we're coming back to this second Keltner to the downside around 150. And I have a key level here around 149-ish. AMD. AMD, decent bounce yesterday. And holding this 77. Basically kind of trying to make a neckline out of that 77 with the head down here. Let's see if it continue to hold 77, or at least the bounce point from late in the day yesterday at 76.5. And work our way from the squeeze bottom up to the top where we have our 78.3, let's call it. But overall, chips aren't getting love. Right now, for me, chips are on the do not touch list. There are other names with better relative strength. For instance, Amazon. You can see on Tuesday on CPI, like I said on Apple, it gave no bounce. Well, Amazon did give a bounce off its daily 50. Yesterday, decently strong. Did not get back down to lows and pushed for new highs back at that daily 50. So we got to recognize when there's relative strength. I'm going to draw a little trend line here. As long as we stay above this whole trend line, looking decent to the upside, we can slip below it to retest the last bounce point from late in the day yesterday, which is down in the squeeze bottom. But we need to get back above the trend line quickly if we do go down there to test it. The longer we stay below that trend line in the squeeze bottom, we can break down. So if we can move from, let's say this 26.5, 27 little zone from this week's lows and the last bounce point late in the day yesterday, we can hold that zone of support, work our way back up, looking to get to yesterday's highs, back to this daily 50 at around 129, where the top of the squeeze sits. And if we can push through that, looking to get to 130, where the daily 8 and 15 will be sitting. And if we can get through that, around 131 will be the daily 21. So it's not too far away. Now that we are below the mean after a big sell, big money might want to take us back to the mean for a test before the next leg down. If we start to lose that zone of support, then we're likely coming back down to retest 125. Come on. Don't freeze on me. If you look at 125 and look left, that's the last kind of bounce point that we had on that rally. So expecting a lot of buyers to be waiting there at 125 to defend it. And if we get through, come on, toss, you're killing me. Oh, fun. There we go. If we give out 125, then we're coming to the lows from a couple of weeks ago. Yep. At around 124, and then 122 where that second Keltner sits. Let's start speeding this up. BA, nice and strong yesterday. Love this chart. Very good for the upside. BA has a 2-day squeeze that it slipped into on CPI data. We peaked outside it yesterday and fought back to the top of it. So basically that 2-day squeeze cloud making a range. Definitely want us to stay in that range and not head back to yesterday's lows. BA has some decent weight on the market and we need it to stay up. We needed a good bounce on BA yesterday and we got it. So let's see if we can hold yesterday's afternoon bounce point. I mean, you can see the market, ES, fell back yesterday and set a new low. BA just took a break and then closed back near the highs. So, be great for the upside if BA could stay above that bounce point from yesterday and keep moving off of this 2-day squeeze bottom. First stop to get through yesterday's high and that psych level of 150 in an effort to get back to that first Keltner to the downside around 152. If we can't get through the highs of yesterday and we start to give out that bounce point, likely coming back to retest The bottom of the squeeze around 146. If that gives out, yesterday's lows. And then our third Keltner to the downside is around 140. So BA already got beat up from the mean down to second Keltner. Well, let's see if we can find our feet there and start to work its way back up. Cat. So did not make it down to second Keltner like we just saw on BA, and decently strong yesterday. Also did not get back down to lows and closed back near the highs. So not a bad day for continuation. Let's see if the market allows it to keep trucking. And we are close to yesterday's highs on some of these prints. So let's see where she opens, but ultimately looking for this first Keltner to the downside, 182.5 to hold. Kind of that last bounce point yesterday. We do still have squeezes in place that will provide direction, play that range until it breaks. So if we have a dip, looking for that squeeze bottom, that second Keltner to hold, to send us up through yesterday's highs to get back to the daily 50, daily 8, and the top of the squeeze. And if we can reach a little further past that, back to 187, where the daily 21 and daily 15 sit. Any further through that, 189.5. Google. XLC, a little weaker as far as the sectors go. Decent day yesterday. Pushing to the upside, rejected those pre-market highs, came back and set a slightly higher low before coming back and closing near those highs. Still, our overnight highs the same as yesterday's as we come back. So, looking for the squeeze bottom and this 104 to be support. Could go as low as yesterday's low, but looking for that to be a support zone that sends us back up through 105 in a bid to get up into the squeeze top at 105.5, 106. We'd want to test that bounce point at 106.5. And if we can actually get through there, then it's to that first Keltner and daily 8 above at 107, 107.5. GS. A little weakness yesterday on the financials, right? And we are testing the lows from last week. We're right near those. We did not set a new low, but we got pretty darn close. So kind of have our floor down here at around this 324. If we have a dip, looking for that 324 to hold, these squeeze bottoms. If we can get going to the upside, looking to take out where we were rejecting midday, around 328, where that daily 50 sits. And if we can get through that daily 50, looking to get to that 330, kind of near yesterday's highs. And a bid to get back to this 1 hour squeeze top around 331.5, 332, where that daily 8 will likely be stepping down. JPM. Same story, a little weakness yesterday, stayed under VWAP. We have our squeeze in place. Let's see if the squeeze bottom, yesterday's lows, can provide support to send us up. We are stuck in all of these daily moving averages. So wouldn't be surprised if we stay in this range, bouncing around liquidity before the market makes its mind up on the next move, higher or lower. If we break down from those lows and that squeeze bottom, next stop that first Keltner to the downside around 113.5. If we can get out of squeeze tops and out of liquidity zones, I call these moving averages when they all come together like this, area of liquidity. If we can get through that, looking back to 118 that we rejected, on a mission to get to 120 where that first Keltner sits. Meta. Meta is down at the bottom of a 2-day squeeze in that second Keltner. Let's see if it can find its feet and just stop going lower. Looking for it to hold that 149 low, 150. Trying to get back through 152, 154. In a mission to get back to 156, where that first Keltner to the downside sits. If we roll over and break down and take out yesterday's lows, we have this 2-day squeeze that we can should provide support since it is thick, it is mid-compression. But if we do keep diving, we have that third Keltner down at 142 as a target. Microsoft, little relative weakness, right? More of a downtrend, whereas on some of the tech names we saw an uptrend. We are below lows from the last week or two. So let's see if we can get back above those lows at around 252. If we have a little dip, looking to try to hold 250. If we can get through 252, looking to get back to yesterday's highs at 254. Then our last rejection point from CPI around 257. And that daily 8 and first Keltner might be stepping down near there. If we break down, we have our third Keltner, the downside, around 245. Netflix. Relative strength yesterday, and they had some news midday talking about the new subscription tier that they're pitching. It would be an ad-based subscription tier that they estimate could bring in something like 40 million subscribers to that free ad tier. So good news for Netflix. It already got through the rejection from midday CPI and got back above the mean on a gap up. So relative strength here. If the market is going to give us upside today, we want to focus on names with relative strength. Keep an eye on Netflix. See if it can hold the daily 21, daily 8, now that it's above it, providing a nice floor. If it gives out, watch for that gap fill down to 224, where we closed, because we could hit a quick gap fill and pop right back up. If we can hold the mean and keep trekking through 230, looking to recover the CPI drop back to that first Keltner to the upside around 237. NVIDIA, the biggest name on my do not touch list. NVIDIA has set new lows of year. Set new low of year on CPI here. Set a new low of year yesterday. It's been getting its butt kicked after the not so good earnings report. So definitely leaving this one alone. It is down at that third Keltner to the downside, which is getting into that oversold territory. But not really loving this name to try and make a recovery with such negative headwind. So not touching it, moving on. QQQ. Decently strong yesterday. We played the, what was it, the 295s, 6s, and 7s yesterday up in the top of the squeeze. They were a great trade. She came back, held squeeze bottom right back to top. Little fade, but decent reaction to our jobless claims data that came out. Looks like, thank you, Drewski, if you're listening, for dropping that data in our server. Looks like jobless claims were not quite so bad. In fact, a little bit of a beat. So that's helpful. On QQQ, let's see if we can hold our trend line from the lows pre-market and yesterday. Kind of providing a trend line of support right at the bottom of the squeeze. So looking for about that 294 to hold if possible. Yeah. See if 294 can hold, get us back through yesterday's highs around that 296 and a half. If we can keep trucking, 298 is the big key level to watch. In the top of that squeeze, that first Keltner will be there as well. 298 and a half, we can call it, that rejection point. It's the zone we're trying to get to. If we can get through that, then psych level of 300, where the daily 8 sits. So I'm just now looking over at chat. So you're more bearish today? No, not necessarily. And in fact, if anything, I'm wanting to see if buyers can step in and try to push us out of this range. In a few minutes, I'll cover what gives me a little bit of pause and what we could see in a bearish setup. But yeah, let's see if Roku can get up to that through that 296, 298 in a bid to get to 300. If we break down, lose that 294, come to test 293. If that gives out and we start to fall through the squeeze cloud, then the second Keltner sits at 290. The third Keltner pretty far below that. So, and 290 is going to be hard to get through. So, SPX. Let's see if we can hold this zone of support around 39.30, 39.36. If we can push off of that, get through 39.50 and 60. Then it's a bid to get back up to 39.80 and where we last rejected, around 39.96, 4,000, where that daily 8 sits. If we break down, and bears do step in for continuation of the downside, looking first to get down to yesterday's lows, around 39.15-ish, then psych level 3900, and that second Keltner, the downside, which will be around 38.80. SPY. Holding our trend line from low of year, trying to work off of it to the upside. If we continue to hold that trend line and the squeeze bottoms, where we do have a couple of trend lines, if we can stay above yesterday's lows around 392, push off of these squeeze bottoms, start to get through right now, the key resistance is 395.8, very key level for us, where we bounced. I mean, this level's been around since, and important since like March, right? But we held it and had that rally. We are below it, so that starts to set up the potential bearish setup that I was going to mention. Real quick, let's go look at this on a daily, just to show. We had our gap down on CPI. One candle. We have a doji here, 2 candles. This could set up for a potential 3 candle combo where we get a move to the downside. Right? You get your 1 candle, your second is kind of mute and small. You can get a 3rd candle that goes down, creating one of those 3 candle combos, right? So that's something we want to keep an eye on. If it does break down, looking for this zone to hold. So a very key zone at that 388.42. So if we do start to break down and give out CPI lows, yesterday lows, that's where we're going to go. The last bounce point that sent us up. But back to our normal time frame. Overall, like that we are kind of setting a good little base here pre-market. Actually starting to pop a little more now. Let's see if we can get through that 395.8. That is resistance. If we can get above that and push off of it, looking to get to 398 and then 400, where that daily 8 sits. Past that, if we can get to 403, that's where the daily 21 and daily 50 are overlapping. Tesla. Tesla had some amazing relative strength on CPI and yesterday. Talked about this when we saw the the CPI drop and the market kept going. Tesla just sat right at these daily moving averages. Daily 8 here, daily 200. Yesterday, opened right near those lows and just ripped. We played the 300 call. Called it out at $1.80, $2. It opened near $1.88. Those went up to $8.75 at the highs for well over a quadruple on our call out. So great relative strength here on Tesla. It already led to the upside. Let's see if it's going to continue. We want to watch that CPI high. But it could also take a break and set into a bear flag. I'm sorry, a bull flag, while some other names play catch up in the market if we are going to see upside in the market today. But let's see how it deals with that 300 level. It just slipped it a little on that late day pullback, but right back above to close. If we can keep trucking to the upside, obviously looking to get back to that high from CPI. And anything past that, psych level 310 and that second Keltner at 312. If we lose that late day bounce point around that 298.75, we can slip back down to test that 296 where we bounced. Any further below that, we're back to our moving averages. UVXY, going to cover this just to say, even though we had our drop in the market and everything, UVXY just ran to the same zone that it's been rejecting. And even yesterday, stayed under that and kept rejecting. So, for upside in the market today, looking for CPI to keep slipping. Got a nice downtrend here. I'm going to try to mark. Yep, there we go. So, for upside in the market today, I want to see UVXY stay below this trend line. Stay below 10.5. Below these pre-market highs. And start to push down to these daily moving averages back down at 10. If we're going to see downside in the market, we're probably going to see UVXY start to bounce, probably near these highs from CPI morning drop, around that 20.2. So we'll see, if we're going to see downside in the market today, we'll probably see a bounce near that 10.2, or the squeeze bottom, and we'll see UVXY get back up to 10.5 to test this trend line, maybe getting through to retest this zone. VIX. VIX did a great job yesterday of staying under our key levels of that 27.57 and 27. Rejected 27.57, came down to squeeze bottoms, bounced off those squeeze bottoms, but stayed under 27. So it's a good sign, creating a nice down channel on VIX. So for upside in the market today, looking for VIX to stay under this first Keltner and under this channel top. That first Keltner sitting around 26.5. So looking for VIX to stay below that and keep slipping through 26 down to 25.5, where some moving averages sit, and 25 is right below there. If we're going to see downside in the market, we're likely going to see VIX hold near, maybe hold these pre-market lows, maybe slip enough. But ultimately, if we're going to see downside in the market, we're going to see VIX come back up to test 26.5, get through our trend lines from yesterday's highs, back to 27, and maybe even back to the highs of yesterday. So, Hopefully this was helpful for everybody. Thanks for tuning in. If you're new to Predicted Trades, it's your first time tuning in, maybe talking to you, Caddy Pan, that asked the question about bearish today. If you're new and this is your first time, definitely come check us out. You can find a link in our description here to get into our Discord server for free. It is a free Thursday where you will get to test drive our tool. We provide a proprietary tool that we call our Beast system that you can load on your options charts, and it will give you amazing advantage on trading options. So definitely come check us out, join into our Discord for free, and try out our tools for free because they expire after this week, since it's all options based. But it's it gives you great edge. It provides a lot of key levels on your options charts to get in and out of your trades. Yesterday we hit that 4x on Tesla. We hit a number of doubles and triples. So you definitely owe it to yourself to come check us out. But thanks for tuning in, and we'll see everybody in the chat.